Boom. We are alive, ladies and gentlemen. Ooh, I've got something fun for you today. Yeah, I think you're going to like it. We're going to start off with something you're probably not going to like to hear me say, but I'm going to do it anyways, just because I think it's probably the nice thing to do for everyone. Right out the gate, give us a thumbs up if you like this content. Please subscribe to the channel, and let's go ahead and dive in. So for those of you that are new to the channel, I have talked about a term called scale invariance a few times before. And it is a mathematical terminology that says no matter how close or far away you get to something, you're going to see a repetitious cycle and pattern. For instance, if the way the water falls down the ground or on the snowflake or what it looks like from up in the satellites, they look almost identical. And more importantly, here what we've witnessed with Bitcoin is another repetitious cycle that I believe is the proof that this bull market is not over, just taking a breather. So on the bottom in the pink, we have the 2013 to 2017 accumulation cycle. And then in the top in yellow, we have the 2018 to 2020 accumulation cycle. So from the bottom of the accumulation portion to the extension and the breakout of the box, you had approximately 1,200 days between 2018 and 2020. And from the same area on 2013, you had around 1,260 days till the breakout of the box. Now, I don't know why, but ladies and gentlemen, that is eerily freaking similar. The other point that I wanted to point out here, seems a little redundant, but nonetheless, let's go with that anyways. If we draw from the top of our box, I've got a lot of stuff drawn on this one, so let's do on the bottom one here instead, although I'm sure it's going to do the same thing. So we're going to draw from the top of our box. This yellow line here represents effectively the moment when we broke out of the accumulation cycle and started to move into the bull market. If we measure the approximate time, and just approximations here, to the first 40% dip, you're at around approximately 180 days. Now what we're going to do is we're going to hide our drawing here, and we're going to take that same inference, approximately the moment we broke outside of the box, to where we are today is around 180 days. Now, one of the reasons why I love mathematical terminology when we're looking at the charts, and it's one of the things that most interested me about market cycles to begin with, was that on average, usually what we witness is the repetitious cycle of nature. Again, the way the alveoli in your lungs look in compared to the way the branches on the tree or the roots look, they are almost identical. Nature has a way of repeating itself. Now, a lot of people like to think that the markets are somehow separated from the universe. That's a silly thought. That's what they think. And therefore, one of the connotations, or I guess we could go out and say I'm outlandish enough to pontificate, that what we witness in the markets are also repetitions of these cycles that are actually much deeper than just us buying and selling and are probably a part of nature. So I thought this was a really fun chart to share today, and it leads me to believe that what we're witnessing right now is probably the low of the next bear market cycle itself. So if you actually go out and you do the same forward-thinking momentum here at around $3,600 between 2018 through 2020, getting in Bitcoin at anywhere between $4,300 was like the best position you could have entered had you gotten here at the market right now, basically. So for me, what I believe we're witnessing right now, again, is one of these scale invariant functions of the universe, where it just so happens that at the moment we broke out of the box to where we are today is about 180 days. And lo and behold, the exact same thing happened about approximately 180 days into the Bitcoin bull market cycle. You saw this big drop. And that big drop, at least from the top to the bottom, represented around a 36% cycle move. Now, back in 2017, we had nowhere near the leverage in the system that we have now. And therefore, oh yeah, hey, for those of you that are wondering, there is no light today. There we go. It's back on. We're green still. I'm just showing you why I believe we're bullish still. And from this top of the wick to where we are now, we're looking at around a 44% drop. And again, this is with these daily candles on the area chart. Now, one of the most interesting parts about going through this function is, again, to recognize the similarities of the bull market structures themselves. For those of you that are new to Wyckoff, because it's now very popular, which is great to see, human nature has never changed. As a matter of fact, human nature will probably never really change. Nature has never really changed. No matter which planet or which part of the universe you fly to, at least that we know so far, you have these repeating functions and cycles. That's why, for whatever reason, galaxies being born seems to look like eyeballs. Nature has a way of repeating these systematic functions because they are based off mathematics. So again, the reason why we want to go over the dead cat bounce idea today is because of articles like this. First off, you can pay to have an article here. Now, I've met Jamie Redmond. He doesn't know a whole lot about technical analysis, so I don't know why he would be writing about technical analysis. So it's very likely that Jamie was paid by somebody to write this article. So let's see who this analyst is. From Biotech Valley Insights, crypto investors should sell and do not look back. The analyst said that he warned that investors, a previous article, and again, guys, remember, we've seen this happen before. Had you sold your Bitcoin here, it would not have been a very smart move. Now, what I do want to say is that if you're new to the markets and you're worried, you're over leveraged, which I hope you're not using leverage at all. Maybe you're even overexposed. You're losing sleep trying to think about what the markets are doing. You should fix that. So if that means readjusting your portfolio and selling, hopefully at a profit here, because if you should have been getting in much earlier, you should not ever really make bets that you can't sleep on. So I've been enjoying this ride because for me, what I think we're witnessing is just this repeat cycle that, lo and behold, we saw the first cycle move down here and then a second cycle move down here. It just looks too eerily similar to think that this is the end of the bull market. I mean, especially when you look at this. Look how irrelevant that those two became in the eventual long term of Bitcoin cycle. So to think that the end was here, I think, is kind of disregards the understanding of scale invariance, and it probably means that whoever that analyst is I don't know, not that good. You have to remember that lots of hedge funds get wiped out in what they call black swan moments. For those of you that don't know, Willy Woo's hedge fund was wiped out almost in an instantaneous moment because the pandemic happened. And how could you not see the pandemic coming? Anyways, I don't know, kind of a weird sentiment. But again, the point there is that lots of people who seem intelligent blow up and lose their accounts. And you don't want to be those people. So again, don't use leverage. There's a key lesson to be learned here. But also, more importantly, understand that one of the fun parts about technical analysis is that it gives us these insights that the average person doesn't have. I feel very confident that whoever this Biotech Valley Insights has nothing to do with crypto, knows what the term scale invariant means, let alone is probably some kid that went to Harvard and thinks he knows. The biotech author is a financial blogger, ranked 7,211 out of 8,000 other bloggers. Well, what the fuck? Why would they even let this? So basically what they're saying is that this article has been paid for by a guy that sucks at writing and probably sucks at charting. He has an average of negative 18% return per rating. Nevertheless, the biotech insight research is not only and then they use Peter Schiff tweeting about it. This article is fucking trash. Jamie Redmond is definitely a spammer. Bitcoin.com, as we know, is definitely full of basically spam. Jamie Redmond was probably paid for to write this article, and that's it. They probably paid him specifically to write this article. This is what FUD in the ecosystem looks like when you see that they're writing an article and then even give the idea the biotech author is a financial blogger ranked 7,200 out of 8,000. He didn't even break into the top 1,000. That means he fucking sucks. Oh my dear God. And they say this in the article. Like, what the fuck? See, ladies and gentlemen, I didn't have time to read this before. I just wanted to bring it up about the dead cat bounce with the grind of 15 grand. Because I saw it the other day. I hadn't got a chance to read it yet. But this is hilarious. Why would you even want this data up here about yourself? Like, hey guys, I'm out of 8,000. I'm number 7,200. I'm in the lowest fucking 80 percentile of the market researchers. Listen to us. Okay. So either way though, I do think again that for the average new investor, if you are overexposed here, reduce your risk. You should never be overexposed looking at your portfolio to make day-to-day living gains, right? And I've I probably should have talked about that a bit more. I know that because I scare most of the average newbie people away, one of the goals here is to focus on people who are critical thinking, right? So if you do something silly like spend all the money you're probably supposed to be sending on your baby's freaking diapers to buy Bitcoin, you fucked up. Okay, that means you're a shitty dad or mom. I don't know. Don't do that, clearly, right? You should focus on taking care of your basic needs first, and investment strategy should be what you have that run along the side. And effectively, you should be making entries every month. Take a look at Michael Saylor. Makes a $15 million investment every month into Bitcoin, regardless of what the price is. It seems to me I think the 23rd of that month, he makes another investment. If you want to become successful, do what the other successful people are doing, which is just accumulating on a consistent basis, almost regardless of where the price is. I bet you here in the next few days, you're going to see another article from MicroStrategy saying that they, again, bought more Bitcoin, right? Because averaging price over time makes a lot of sense. One of the things I did back in 2000, let's go back here. It's going to look ridiculous to zoom in this much, but let's take a look at the other micro cycles that we've paid attention to in the past, which is the 2013 accumulation cycle before the market run up as well. Now here, let's go and we're going to look at the 2013 cycle. Let's see if we can get it to repeat itself here as well. So okay, well, here's a good argument for this. Is the only let's argue against myself that the bull market is over. Sure, let's do that. Okay, so let's argue that the Bitcoin bull market is over. Here's actually a beautiful analog between 2013 and 2014 when we saw, although what's interesting here is that this is a much shorter accumulation cycle. This was only 213 days before you saw the run up, whereas here the analog is actually much closer to around 1,000 days, which we did see. But nonetheless, let's go over this and make an assertion for those of you that are investors. Let's say you bought Bitcoin right at the top. Now, as long as you didn't sell and you kept accumulating Bitcoin along the way, you would have had the opportunity to average your price down into the hundreds of dollars over the course of the next 2 years, giving yourself the ability to buy a crap ton of Bitcoin while basically ignoring the larger market cycles. Now, I actually don't think that, although this analog does look similar, the time frame doesn't match. And during accumulation ranges, you really want to note that the time is important. So from the buying climax to the breakout of the box, you have 1,000 days. And because of that, you usually have a decreased order of the difference between the time frame. So for those of you that are studying P&F charts or have gotten that far with the Wyckoff accumulation ranges, one of the things to note is that a P&F chart helps you kind of pick the top based off of the amount of time it took for the accumulation range. So even though that other analog is quite similar, at least in terms of structure, the difference is the time. And you need to take into account that the amount of accumulation that took place here for the time or the duration is more important, I think, than the direct version of the analog itself. So from the buying climax of 2014 to the breakout of the box, it was 1,200 days in 2013. And from the buying climax to the breakout of the box here was approximately 1,000 days. From that moment, you can see that we have, again, these repetitious cycles where from the breakout of the box to the absolute market cycle top was around 360 days. Usually 1/3 of the market cycle itself. So let's kind of run this up here just so we can get in there. And that we're looking at December, January, basically. So from the breakout of the box here to the January, December mark, we have around approximately a 304-day market cycle, right? So we're, again, I still believe about exactly halfway through this market. Now, again, just to be clear that when we look on these smaller time frames, we are watching what appears to be a new accumulation cycle. Now, again, what's interesting is that these can very quickly turn into redistribution cycles, right? So that we could see more downside. And as we've gone over a few times, I believe we're probably going to come back down and test this $33,000 area. One of the reasons being is you have people like Tesla buying billions of dollars of Bitcoin at that $30,000 area. That's a pretty nice floor. And again, more importantly, and the thing that I think is the most interesting, is that if you compare these two cycles as an overlap, like we have here, let's make them look a little like this, basically. We'll make this one bigger too. Just again, to kind of get this, flush out the picture that I believe we're seeing. This moment, boop, boop, beep, there we go. This moment here was the lowest chance to buy Bitcoin's price for the rest of the Bitcoin bull market cycle. It was approximately around $3,000. So I believe what we're witnessing today will be the bottom of the next bear market. This will be the bottom of the next bear market. Keep that in mind. It is not the end of the bull market now. That's my opinion. If, again, you are over leveraged for some reason, or if you are overextended in a position where you can't sleep and you're doing stupid things like spending your baby mama's money on Bitcoin instead of diapers, you suck. Fix that. Come up with a better investment strategy, because no matter who you are, you should be making investments, but they should be based off a more periodic placement. Again, we go back into 2013 when I started to buy more Bitcoin again, and I bought at the very all-time high, right? Oh no, boo-hoo. But what did Tio keep doing? I kept making accumulations along the process. And in 2017, when I saw Bitcoin break above $400 again, I went haywire. I was like, great, I'm spending everything I can get my hands on Bitcoin in that moment. And it played out really, really well for me. But if you don't understand the macro cycle, the repetition of these cycles specifically as well, it's really easy to get confused, get washed out, and not understand that being a good investor often makes you way more money than being a bad investor. Yeah, and by the way, I'm not trying to convince anyone to sell their Bitcoin. I'm just saying if you're over leveraged and if you're overextended, if you've made poor decisions, you should adjust so that you're not in that poor decision moment, right? Just so you can sleep again. That's always a good idea. So keep that in mind. And an investment strategy you need to build like going to the gym, ladies and gentlemen. It should be something that keeps going. Keeps repeating itself. Now, again, I've gone over this many times. I think we're headed to around $120,000 for this Bitcoin cycle. I think we're probably going to come down here and touch around 32 to 34,000. I think we're going to complete an accumulation cycle that's basically designed to fucking bore people and bore the average retail investor with shit articles written by stupid fucking people who are in the lowest percentile of the ranking on whatever blogs they blog about. Biotech analyst plans to short Bitcoin all the way down to 15,000. Well, this is why he's returned negative 18%, probably consistently. I can't believe that they let people like this even write. Like, this is Bitcoin.com. You suck. No one should ever use this website. Look at the trashy. Anyways. Bitcoin.com for all your shit fucking garbage FUD needs, where you can pay for an article for $1,500 and say whatever you want because they're absolutely broke, because instead of buying Bitcoin, they invested in Bitcash, B-trash nonsense. Brought to you by Roger Ver, ladies and gentlemen. Bitcoin.com, the worst website in the Bitcoin history. So don't do that. Don't listen to websites like that. Again, I think this is a really beautiful chart. I think that this looks perfect. And again, you measure out from the breakout of the box to that first moment, you're at about approximately 180 days. You do the same measurement from the breakout of our box, which was right here, to where we are now. You're at about 180 days. This is what scale invariance looks like. And just for fun, one more time, I want to go over this. For those of you that want, you should study more. It's one of my favorite things to do. I love reading. I love learning. Here's scale invariance. So scale invariance is a physics, mathematics, or statistic term that uses a feature of objects or laws that do not change if the scale or energy or other variables are multiplied by a common factor. Here you can see the Wiener process is of scale invariant, which is one of the reasons why it also looks like a chart. The technical term for this transformation is dilation, also known as dilation. Well, that's clear. In mathematics, scale invariance usually refers to the invariance of individual functions or curves. So if we want, again, here's another one, the Koch curve. These start to look more and more like fractal geometries. If you want, one of the fun ways to see it too is scale invariance in nature. I've tried this before. Let's hope there's some awesome photos, because the photos are sexy. They're not going to give us any great photos, are they? Let's see if nature.com had one. Okay, well, so these are fun little mathematics terms as well. Nature.com, let's see, scale and variance. Hopefully they've got some really good pictures, and they don't. So I should have loaded this up because I knew I wanted to talk about scale and variant and see if there's any good, like these should be amazing photos, ladies and gentlemen. I can't believe they're all mathematic terms. The nicest ones they're showing are the fractals so far. Which does make sense, but it's a very, very natural phenomenon as well. In, let's say, in scale invariant in rivers. Maybe I have to type in something natural to see. Yeah, here's. I mean, this is kind of it, right? You can see here. This is a small or a riverbed. It's going to load the photo here, and you can see the way that the curves of the water have left scars on nature. And if you zoom out and you start to look at things like the mountaintops, you recognize these identical functions. So it sucks that there's no really good pictures here because it's one of the most beautiful features. I think one of my favorite features in more advanced mathematics is this term of like scale invariance on mountains and rivers. It's too bad they don't have like an easier version of this data. Another way to study it is the Mandelbrot set of roughness. Yeah, they don't have any more good pictures here, which is too bad. Anyways, we'll skip that for now. We'll go back to this. This is what scale invariance looks like in the markets. There's a fantastic book. I'll recommend another book for you as well during this process. And so I'll start looking at the names. It is called The Misbehavior of Markets. So The Misbehavior of Markets was written by a gentleman named Benoit Mandelbrot. Benoit Mandelbrot was the first to identify the Mandelbrot set. For those of you that do not know what that looks like, it is this beautiful kind of repetitious geometric pattern that shows how you can make kind of everything inside of nature out of these simple functions. So this is Benoit Mandelbrot's fractal, the Mandelbrot set. For those of you that are into psychedelics, I'm sure you've seen this before. You've probably seen these before. Some party. This is the original, at least created in our mathematic functions to show the frequencies to create everything that we know in nature. This is another form of scale invariance where no matter as you move into these things, you will see the pattern repeat itself basically infinitely. These are other forms of Mandelbrot sets, just repetitious cycles over and over and over again. So again, I wish that they had more pictures of the natural versions instead of just the geometry on computer versions. But this is what scale invariance looks like in the markets. And again, for those of you that want Mandelbrot, Benoit Mandelbrot, Misbehavior of Markets is a great read. And it goes along the line of just understanding, the misbehavior of markets. Here you go. Here's a little write-up from Yale University about and the abstract here. Markets are much riskier than most people or most financial professionals realize. This is true. And again, here is that because of this, what you'll see is people like Willy Woo had a hedge fund that blew up here. They lost $40 million right there, right at the most important time to be in the market, because their risk analysts are like, no, everything's fine, not recognizing that, well, wait a second. Just compare these two. We're missing something here, clearly. Downside, a spring. Oh, okay, look, they repeat. So a lot of people study mathematics, or they study markets, and they know very little about them. The Misbehavior of Markets is a great book. I also love everything written by Nassim Taleb. And understand, again, that the main point here is that there's always volatility in the market. One of the best ways to do that is to accumulate consistently and basically ignore price and become an investor in understanding what is valuable. Most traders lose money. Venture capitalists and private equity investors make up a huge chunk of the Forbes top rich list, right? Not traders. There are a few like Jim Simmons who could do it really well, but they're not the normal. Anyways, thank you guys for joining us today. This is Tea with the Arcane Bear. I'm not going to go over anything else. I just thought this would be short, simple, and specifically what I thought about this crap freaking article by Jamie Redmond about the dead cat bounce, like clearly a paid-for spam article. So guys, don't use Bitcoin.com for any information. They're clearly a wash. Let's take a look at some of your guys' questions. Oh yeah, look at snowflakes. This is, okay, thank you. Again, let's go over scale invariance here. Scale invariance and snowflakes, and I think the mountains. This is kind of a fun one. Let's see if they give it to us. Oh, here we go. Here's a fun one. So here's trees, neurons, and snowflakes. Um, oh, the pictures are so tiny. um, I'm surprised that the functions here are so. Anyways, you can kind of see it. You'll have to go out and do your own homework. Next time I'll try to look a little bit harder because they're beautiful. And again, you do see that these repeating patterns. Again, here you have scale invariance in financial research, which brings up the Elliott wave theory. Fibonacci also fits within that. The way the snowflakes compared to mountain tops scale invariant. Come on, Google, be better at your game. I can't believe Google is so bad at this. Anyways, ladies and gentlemen, it's too bad that Google doesn't, or I guess it's probably the scientists' fault for not just creating more content that's awesome. Not Google. It would mean that Google's probably doing a great job. Yeah, snowflakes are another beautiful way to look at scale invariance and the repeating patterns of the way water moves through mountaintops. But I can't believe so many of these photos are old. It's crazy to me. Like, I can't believe no one has made these like beautiful comparisons. Let's see, mountains from satellite data. Yeah, there you go. Here's a kind of a nice photo. You can see how the mountains, the curvature looks very similar to the snowflakes that we were just looking at. Again, I really am so blown away that people have not done a more cohesive job of comparing photos like this on a frequent basis, because it's one of the coolest things ever. I love the idea of scale invariant. So anyways, keep it at that. Thank you all for joining us today. Do your own homework, do your own research. Sorry I couldn't find a better rendition of my scale invariant form. It just means that scientists have been lazy lately and they're too focused on less cool things like diseases and viruses. Anyways, we'll take a look at a few of you guys' thoughts and questions before we dive off here today. And then we'll take off. You had a nice pick in the private group. Yeah, I think that this is a good one. This was another one we shared in the private group, and we shared it on Twitter too. This was another variable format. Here's the one that we shared as well this morning, just showing again around 180 days between the breakout of the box and the first move of the cycle. And oh yeah, and there was actually one in the private group. I think it was in the Bear token chat. Oh yes, this one, the GIF of scale invariance. Let's see. Yeah, there we go. That's kind of the nature of scale invariance, the fractal relationship between the universe and everything else that's out there. So have fun with that, ladies and gentlemen. I hope hopefully you enjoyed the trip out moment. Let's see. Should we panic if Bitcoin dramatically crashes? No, you should never panic. You should always focus on long-term investment strategies. They work the best. It's the people who've made the most money. Tio goes to leave, then gets caught up, giving us more value every time. Thanks, Pounce. I appreciate that. Hey, Tio, any thoughts on another 6 trillion being printed? Yeah, the US dollar is just going to be printed into absolute oblivion. So awesome. And thank you guys all for joining us today with this Tio with the Arcane Bear. I know I was a little bit unorganized on my scale invariant function, but I hope you enjoyed the content. Give us a thumbs up. If you're new to the channel, please subscribe, and don't hesitate to actually go and subscribe to our Twitter channel as well. I'm about to have a little bit of a milestone moment there. So if we get to 10,000 followers, it will now say 10K. I would be really stoked about that. I think that's fantastic. I like to see these functions. Follow me on Twitter for photos about reaccumulation cycles, or my office view when I'm working, or sometimes I draw psychedelic bears, so be sure to follow me on Twitter, because I'd really appreciate that, because I want to see the number 10,000 here instead of 9,493, and I could use your guys' help for that, because I can't follow myself. I already follow myself, technically speaking. Everywhere I go, Tio's following himself. Oh, I had a great time with you all today. Thank you again. It's Tio with the Arcane Bear. We'll see you again on the next episode. I'll be live tomorrow. I'm going to do a few more what the fuck is videos. So for those of you that don't know, we are starting a new series. You can go to arcanebear.com and you can take a look at the start of this series. Some of it starts in our Wu-Wei research, but it's also under our club. It's called What the Fuck Is This? As we dive deeper into some of the other tokens and ideas that are growing in this decentralized finance arena. I think is a lot of fun. So if you want, all of our writing will be up there and available, and we're going to start making videos based around these what the fuck is thing, because there's so much to learn. And that's what we're really trying to do here more than anything, is just educate ourselves about this growing technological space that can clearly replace the old financial sector. Anyways, it's Tio with the Arcane Bear. Thank you all for joining us today. We'll see you guys again on the next episode.